Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the middle here of the month in November. It's 17th, and it's still 2022. Now let's take a look at where the market is now that we have some breathing room after some big earnings went in different directions, retail names, and of course the Fed, interest rates, inflation a little bit cooler, down with crude, and a little bit down with the equity market, and still up to an extent with gold. And up with the bond market. So those are some of the top level things we'll be looking at in addition to these percentages in leading stocks and a couple of stocks that are still weak, getting weaker. Let's start with the bigger picture on the SPX. So we're still having we're liking to call this a bear market rally. It's about the fourth one that's taken place if we count, maybe not that one, but each of these has roughly a 350 point move in terms of the SPX. That was about 400 points in the SPX. That was about 300. A small rally, we'll count that as a 1, a 2, and a 3. This one was a double rally, and then it came initially off the lows. But the bear market rally, right? Bear market, big arrows down, that was about 550 S&P points. We've had a 400 point rally, and that has morphed up into about another 500 point rally. So we're looking mainly at these three events, event number 1, event number 2, and currently event number 3, which simply is a larger than expected, or maybe just a large bear market rally. And that's taking us where we stopped and turned back down from the prior highs. And we'll take a look at some of the ETFs, where those are, because some of them are remaining to outperform the market. Nasdaq continues to be weaker on an annual basis and a percent basis. Take the start of the year. And the Nasdaq, the tech-heavy sector, is weak, down 30% as of close or recently today. Compare that to the S&P futures, which are, from the opening of the year to the current price, down about 17%. Still, lower lows, lower highs, bear market. Dow mini futures, let's compare these just while we are here, is down about 7%. Again, roughly speaking, about 7% from the beginning of 2022. And the Russell small cap index is about 18% to the downside. So the Dow mini futures, the companies within it, the 30 big chip names or blue chip stock names, they're outperforming, but it still is the weakness in the tech, consumer discretionary, and retail sectors. Taking a look at the XLK as we start talking about sectors now. The XLK is off about 26%. This is an ETF, again, from the highs. Right there with it is the consumer discretionary. That's XLY. From the highs, it's down about 30%. And we'll take a look at the other, we call it bullish or risk on or offensive sector. It's the financials. The financials actually had a little boost to the upside at the beginning of the year, but comparing it to where we started the year, the broader financial ETF is, I say only, but only down about 12.5%. Compare that to the only sector that has remained bullish in 2022, and it's remained bullish since the beginning of the year. It's the XLE. Currently, it's up about 65%. So other sectors, while we are discussing, is the industrials. We talked about a short sell opportunity against 100 against its range resistance high, and then an XLB, which is materials. Not as downtrend structure, still down on the year, but down, again, only 12%. Staples, which is XLP, consumer staples, retail, but their names as beverages and food and those kind of stocks. Its sector is down about 4.5%, almost 5%. And it does have a sideways trading range, which means opportunities long short would be on either side of that. Healthcare is another sector, just like the staples. We call these the defensive names, and they are holding true to that name. While the stock market itself is down 20 to 30%, S&P and the Nasdaq, these particular sectors are not. And again, the XLP staples, current from opening of the year to present, down about 5%. V Healthcare is down about, roughly speaking, 6%. And the utility sector, as of just today, down on the year about 5%. So it's not all across the board bearish in sector performance. And so what I like to do with swing trading is take this top-down approach, which is the market. The market is the top. Sectors will be second. So sector strength and weakness. And then if you wish to trade outside the sector realm, you would have individual stock selection. And that's where we spend a lot of time picking our stocks, picking our buys, picking our spreads. But each stock will be contained in a sector, and each sector makes up the broader market. So it's not quite monolithic. Monolithic means it's all going the same way. Certain stocks, taking a look at ExxonMobil, just to name a few, continue their strong, getting stronger posture. And if you look at the broader XLE, one way to do that is take a look at the Analyze tab, and you can do this with any of those ETFs, and see the holdings in the fund here in Thinkorswim. And that's on the Analyze tab. In this case, we'll go to the fundamentals, and we'll type in the name of the ETF, this case energy, see the components of it. To see the XLK, the components of it are going to be these leading tech names. So these are clearly in focus. But that's across the board, market, sector, and then stock. Each stock can have a little bit different performance. So now let's take a moment to talk about individual stocks just in one reference point, not necessarily where they are from the beginning of 2021, but how they have performed from the recent low. So let's compare and contrast just a couple of stocks and big names that are standing out. Looking at the SPX, we're taking the bottom of this rally. Again, the bear market rally. Rally goes up against the bear market. And a few times that's occurred. So this current rally, again, is about the 500-point gain from that low to the high in the SPX. That's about a 15 or so, we'll look at this on the chart, 15 or 14% gain off that 3,500 to about 4,040. That's roughly, again, 14%. What I want to know is which stocks are overperforming that 14 or so percent. And are there any stocks that were not participating? In other words, are there any stocks at the moment in the S&P 100 that are actually underneath the price level where they traded on that fateful bear market rally beginning in early October? To do that, we'll take a look at we'll see this here on either a scan, but I'm using the Market Watch, I'm using the Quote tab. So all I've done is pull that out. I've put the rate of change off the low of that October period. So which stocks are overperforming? Think about this as a percentage, that 14% threshold. Not a lot of stocks, but the ones that are above 14, let's say above 15%, are outperforming. And the leaders are some of the names that have been most under the sell side activity, and they are some of the leading tech names such as NVIDIA, Netflix, and a few others are off those lows. But it's not necessarily those I'm interested in right now. It's which stocks are under their lows. Right now, there's 3 of them I want to focus a video on. It is Amazon, Tesla, and Meta. What I'm showing, again, the market itself, the broader market, has rallied, but these 3 stocks have not. And just to show that on the chart, this is that October low, and from there, the current price is down about 15%. So that's what we're looking at with this scan. So Amazon is the first one. Not much difference between them, but Amazon down about 15% from the earlier bottom or the beginning of the bear market rally. That shows relative weakness, and this stock is continuing the sell side activity. Tesla is the other. Again, comparing this to that October low, which is roughly here, Tesla shares are down about 13 or so percent. At the same time, the stock market rallied about 15%. And the other stock is Meta. Although it's had a strong rally off the low recently, comparing it to when the market bottomed and had the bear market rally, it is down about 13%. So these weak stocks are getting weaker and they're showing relative weakness to the market. Just highlighting that context about market, we go to the sector, and then we'll take a look at the individual stocks. So in this video, keep watching these names, and the tech sector remains under pressure as we get more headlines on any other stocks with earnings, anything else about inflation. The other thing these companies have in common, just to name one, is that they are laying off staff. So these are part of that potentially darker clouds coming up on the economic horizon. And that ends where we started, which is the bear market, as of yet, has not reversed. And similar to these other examples, we'll be carefully watching what happens next on this strong rally into resistance to continue, for the moment, a bear market rally. As always, be careful and safe. This is Corey Rosenlund with tonight's Theo video update for November 17th, 2022.